All right, let's talk about something we all use pretty much every single day: banks. But how well do we actually know what's going on behind the counter? We're going to take a quick tour of the absolute essentials, from opening that very first account all the way to the huge system that keeps all of our money flowing. Seriously, think about it. You tap your card, you pull cash from a machine, you send money with an app. But what's the magic behind it all? It feels so simple, but trust me, there's a whole world of complexity under the surface. So let's trace that journey, starting right at the very beginning. Okay, so where does it all begin? Well, for pretty much everyone, it's with that first bank account. That's your ticket into the financial world. But hold on a second. Before you can even put a single rupee in, the bank has to do something really important. They need to know, who are you? And that's where this little acronym, KYC, comes in. It stands for Know Your Customer. Now, this isn't just some boring paperwork. It's a super important security step. The bank has to be 100% sure you are who you claim to be. So the big question is, how do you actually prove that? Well, you'll need to show them some official ID. We're talking about things like your passport, your driver's license, or if you're in India, maybe a PAN card or an Aadhaar card. It's a pretty standard identity check, and once that's done, boom, you're officially part of the banking system. All right, so your account is open, your money's in there, safe and sound. Great. But how do you get to it when you need it? The most common way, the one we all know and love, is, of course, the ATM. Now, at first glance, ATMs seem pretty straightforward, right? You've got two basic flavors. There are on-site ATMs. Those are the ones physically attached to a bank branch. And then you have off-site ATMs, which are, well, everywhere else. Think malls, grocery stores, and on busy street corners. But here's a cool little fact that you probably didn't know. ATMs aren't all created equal. In some places, they actually come in different colors, and each color means it does something very specific. It's like a secret code for banking. For instance, if you see a green label ATM, that one's specifically for agricultural transactions, designed to help out farmers. Spot an orange label one, that's all about the stock market. It's there for share transactions, which is pretty handy for investors. Then you've got yellow label ATMs. Their whole purpose is to support the world of e-commerce. And finally, there are pink label ATMs. These are really interesting. They're monitored to make sure they're used only by women, which adds a great layer of safety and convenience. It just goes to show how banking can be tailored to fit the needs of different communities. Okay, so we've covered getting cash out. Now let's switch gears to an older but still really important way of paying: writing a check. I know, it might feel a little old school, but understanding how a check works is actually key to understanding how payments work in general. So, in any check transaction, you've got three main characters in the play. First, there's the drawer. That's you, the one writing the check. Then there's the payee. That's the person or company you're paying. And finally, the drawee. That's your bank, the one that actually has to hand over the money. But listen, this is really important. Not all checks are created equal, and it all boils down to security. A bearer check is kind of risky. Basically, whoever is physically holding it can cash it. But a crossed check is way safer. You'll see two little parallel lines on the corner. That's a huge deal. It means the money has to be deposited into a bank account, not just handed over as cash. It's a simple trick for a lot more security. So banks are great for keeping our money safe, but they do something else that's just as big. They lend money. Let's be real. For the huge things in life, buying a home, a new car, paying for college, most of us don't just have that kind of cash lying around. And that's exactly why loans exist. Broadly speaking, loans come in two main flavors. First, you have secured loans. This is where you put something valuable up as a guarantee, like your house or your car. That's called collateral. Then you have unsecured loans, which are sometimes called signature loans. With these, there's no collateral. The bank is basically trusting you and your credit score to pay them back. And if you take out a loan, you're going to get to know this term very, very well. EMI. It stands for Equated Monthly Installment. It's simply that fixed amount you pay back every single month. A piece of it goes to paying down the actual loan amount, the principal, and the other piece goes to paying the interest. You just keep paying it until the loan is all cleared. Okay, so in a perfect world, everything with your bank just works. But we don't live in a perfect world, right? Sometimes things go wrong. So what happens when you have a real issue with your bank? The good news is you're not on your own. There's an actual official process to follow.
Here's how it works. Step 1, you have to complain directly to your bank first. Give them all the details. They then have 30 days to sort it out. Step 2, if they don't fix it or you don't like their solution, you can take it to the next level within a year. You can contact the banking ombudsman. Think of them as an independent referee who's there to help solve these kinds of problems.
And while we're worrying about our own accounts, banks are juggling some massive risks behind the scenes. There's liquidity risk. What if too many people want their cash at once? There's operational risk. What if a computer system crashes? And maybe the biggest one of all, reputational risk. Because at the end of the day, a bank runs on trust. If people lose faith in it, the whole thing can fall apart.
So that begs the question, right? Who's watching the banks? Who makes sure they're all playing by the rules and not taking crazy risks? Well, that takes us all the way to the top of the financial food chain.
In a country like India, that's the job of the Reserve Bank of India, the RBI. And man, they do a lot. They're the ones who issue currency, they manage the country's foreign money reserves, they set key interest rates, and most importantly, they supervise the entire banking system. You could really call them the ultimate guardian of the economy. And one of its coolest titles is the Banker's Bank. Here's a simple way to think about it. Your bank is your bank, right? You go there to deposit money or get a loan. Well, the RBI is the bank for all the other banks. They go to the RBI for the same kinds of services. It's the bedrock that the whole industry is built on. So there you have it. We've gone from the moment you open your very first account all the way up to the massive central bank that keeps the whole system in check. It kind of leaves you with a big question, doesn't it? As banking gets faster, more digital, almost invisible, how is that going to change our relationship with money itself? Something to think about. Thanks for joining me on this tour.